All right, let's get going here. Good afternoon, everybody. This is Jim Cagnino with Infinity Futures in Chicago's Infinity Futures headquarters, our new offices on Randolph Street. If you're in the neighborhood, feel free to pop on by or give us a holler. I do want to remind everybody before we start, trading futures, options on futures involves substantial risk of loss, not suitable for all investors and traders. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that could be an equation for opportunity, it's also an equation for risk. So be careful, only fund your futures trading account with risk capital. My personal definition is money I can afford to lose, doesn't change my lifestyle or lengthen my retirement horizon. We understand everybody is unique and different in this world, so if you're not sure where you fit in, feel free to contact your Infinity Futures customer service representative. Everybody has one, whether you're a customer or not, or whether you're a customer of David's at Trading Fibs or not. Doesn't matter. Please feel free to use that free resource as you go through the discovery process of whether this is right for you or not. Also, I do want to remind everybody that past performance is not indicative of future results. Any questions on risk, go ahead and plop those in there into the question box. Everybody hopefully sees the question box. First of all, let me do a sound check to make sure everybody can hear me. Otherwise, I'm going to have to read the whole risk all over again, which is fine. But I'm just curious. All right, there we go. All right, thanks everybody. So this is session 3. We had in my opinion anyway, we had 2 great sessions. Session 1 and session 2 are fantastic. Over the last couple of days with David Katz, spelled K-A-T-Z, and remember he's with tradingfibs.com, and we have on the screen you're going to see what session 3 is all about. Now also David's great at answering questions as well. A wide variety of them, as a matter of fact, and you could also feel free to ask me questions. This is Jim Cagnino with Infinity. As I stated before, the sessions are going about an hour and 15 minutes or so, hour 20 minutes, and again, I think they've been fantastic. I really appreciate, I'd like to thank David for taking time out of his busy schedule. I mean, he's donated the last 3 hours and probably another hour and a half today for us at Infinity, so we'd like to thank him for that. He's going to talk about the live trading challenge, what that's all about. He is the first certified live trading challenge coach that we're associated with. He uses the same trading platform and charts that Infinity is known for, and he's going to show some of those, or at least some shots of those today. Also let you know how you can get his chart books and stuff like that. So we're happy that he's here. I'm going to be here listening. He's going to do all the heavy lifting today. I'm not going to have to do much work. And probably you won't hear from me again until toward the end of the presentation. But again, thanks for being here, everybody. If you haven't registered yet for the live trading challenge, go to livetradingchallenge.com and click on the registration button. I think we're going to close registration June 9th, which I think is next Friday at 12 o'clock. So be sure you register. We'll get you on June 9th a username and password so you could log in. If you want to get a jump on the game, we could also give you a username and password before June 9th. Just have to ask, so you could test out the Infinity AT platform with a real-time simulated account as well as the charts. So feel free to take those steps, and we would love to have you. The trading challenge is a lot of fun, and David will go into detail about it in a second. Any questions for me, type them in. Otherwise, I'm going to unmute David. Maybe I can. Oh, there we go.
All right, there we go.
How are you?
I am good. Unfortunately missed that last pocket of trend for the day. I had to book out of here. So look at the markets, just bang to the upside.
Uh-oh. Well, hopefully it's not my fault and I don't get an invoice, but I'm sorry you missed it.
No, that's right. Sticking to my plan, PM session. All right, I think you can see that. Let's see. All right, I think you need to make me organizer if you want me to see those questions again.
Yes, sir. I'm doing that right this maybe moment. Okay.
All right, make sure.
All right, that should kick in. You have all the magic powers now.
La la la. Okay, just like regular. All right, you can see my screen, right?
Look fantastic.
Okay, guys. All right, sweet.
All right, take it away. I'm muting myself.
Thanks. All right. All right, greetings everybody. What a home run today. I'm just going to jump right to the chart here for a moment. If you guys were watching the markets today, market open, market closed, there was the ES. A little bit of choppy go in the AM session, gave you a small pocket of trend, but look at this, guys. I can only bless you with trends like this more and more for the weeks to come, and hopefully by the time you guys get to the Challenger, those of you who are already live traders, we'll maybe see some more of these. So there was the NQ, small pockets of trend to the upside, and right back up in the PM session, and the YM. What a move. Again, if we take yesterday's information and we start to put it on the charts, we talked about Heiken Ashi bars. We'll do a little bit of review here, but you can see how when I look at my charts, I'm not looking at minute charts. I'm looking at a trend chart. The Heiken Ashi bars indicate trend and tell me everything I need. We'll again review that quickly here today. We're going to talk about trade management, but what a session today on the three indices. All right, so let's regroup here. Again, thank you once again to Infinity Futures for giving me the opportunity to share my knowledge in this three-part series before the live trading challenge on June 14th through 20th. The last two previous sessions, we surely have covered a lot of material in this limited time. For some of you, it might even take longer to soak in, so trust me, I have been there. Again, we'll review at the end where a lot of the resources are, but already the two first webinars are already uploaded to Infinity Futures website onto their YouTube channel. So if there's anything that you forgot and you need to go back and look over, it is there already. So thank you, Jim. I also want to shout out, I appreciate the comments that have been shared on how simple the charts seem, but in the same tone, I want to reiterate that simplicity does work for me, but the markets are nowhere near what one would call simple. It takes time to learn this trade, just like anything new you would learn in life. Unfortunately, too many new traders want to fly the big planes before they ever attended ground school. It's one thing to learn the knobs and controls of the market, you know, per se what we say, the strategies, but it's another thing to start flying solo and wrapping your emotions into this market while just seem to be flying into sometimes the unknown. So that's right, you're landing the Cessna in between two 747s. It could be scary stuff. Anyway, so with a range of traders and their backgrounds who may be attending this session and perhaps those that will view this video later on, the ground school has been laid out for you in what I would say is my Cliff Notes version and straight to the core. So for some of you, my simplicity and thought process may resonate to try something new or tweak the way you look at the charts. However, my goal is clearly not to change your trading strategy if you already have one, but maybe offer you a way to help fix what might not be working. This is how I pretty much see my role as a mentor in my community of like-minded traders each day. Part of being a teacher for over 17 years is my desire to want to see the progress and maturity of what I like to term the Padawan trader into the Jedi Master of the charts. And this is why I do what I do. Anyway, the accolades of now being a coach for Infinity is a true honor. I want to thank Jim and the Infinity Futures Group to be part of this community of traders, helping traders. The learning, you guys know, doesn't stop after my webinar or Jim's next week and all the webinars to come in the future. If being a part of a trading community, whom a majority use CR charts as their platform with me, is something that might interest you, I have an invitation and gift for you at the end of today's presentation for not only being here, but believing that perhaps you want to up the ante and even perhaps win the challenge or take it beyond. So having said that, let's roll out the legal jargon before we get started with lesson 3, trade management. And so before we begin, we got to cover ourselves by reassuring you and informing you that trading is a risky business. Most important, today's performance is not indicative of what will happen tomorrow, though yesterday's performance sure seemed like a repeat of today's. And the official word from the Commodities Futures Trading Commission that covers all my trading webinars, including this one today, that trading is a serious business, very serious, and almost the hardest thing I've ever done. So even if you had a 50-50 chance that will go in your direction, it is a business of emotions that run both high and low. And in my own words, I know you know this, but in case you did it, I'm informing you, covering myself from you blaming me for losing all your money because you went into the market today thinking we were going short and you loaded on the short, and what we do, we ended up going in the other direction. Anyway, anything I share with you today, it doesn't go your way. Please do not blame me. I don't take credit for wins. I don't take credit for losses. I'm just there to help. This is for educational purposes only. You can and will lose money in the market. The goal is to bounce back with discipline and not to revenge trade. The truth is, trading the stock market is tough, and never invest more than you can afford to lose, which brings us to this part 3 of 3 of the webinar series. And so let's get started and put a face to the name here. Go ahead and pull out my live camera feed here. There we go. All right. Greetings, Jedi traders, and thanks for being here today. And I already got questions. Recording for day 1 and 2 available. Yes, it is. It is already available on Infinity Futures YouTube channel. But I will get to the questions at the end here. So feel free as they come up, post them in the question box, and we'll have about 15-20 minutes towards the end. And thank you again from your schedule. I know there's a weird time frame. It's after the market. It's evening session. Some people are already commuting home, but I believe that there's some people who will obviously watch this later on. So good to them, and that they'll be able to watch this in their own comfort of their time frame. All right, so quick webinar session recap. We talked about the trading plan, day 1, Jeff Quinto. We talked about simple trading plans. You got to start to get it in writing. We talked about the books. We talked about Holy Grail in session 1, the contracts ranging from $5 to $31.25, the hours that one's going to trade, the Globex versus regular trading hours. While there could be a trend in both sessions, it's a matter of sometimes where you live, what time zone you're living in. Perhaps you're an overseas trader also and you're listening in today. What are the markets that you might be interested in trading as well? That's going to be up to each individual person. Being that summertime trading is coming up, and when this simulation is going on, this will be at the time where contract rollover is starting, and we're going to have quad witching Friday, in which we have 4 days of the year which this happens, and markets come to expire on one day. It can be volatile, but the second part of the simulation, new contract, everything in for the September contract, at least on the indices. So my preference, especially when it comes to summertime trading, is a couple of hours of the Globex early, and then the first 2.5 hours of the regular trading hours up to noon, though after taking a look at today's session, if you're already on the long trend, you stay on it and you just ride it out to the end of the session. So, but part of this webinar series is to give some of you perhaps an advantage, and so not only it might be the charts, not only it might be the trade management that I'm going to share with you today, but it's also starting out, and for the future, it's starting out with A, the trading plan, 2, the Holy Grail of trading, which you already know because I shared it with you. That's right, the patience and discipline. The hours that you're going to trade, you have to write those down. Those have to be in your trading plan. And what contracts? Some of you are good at multitasking. Some of you can look across your monitor. I have 4 monitors here. Sure, I can watch a lot of markets. Truth is, I stay limited. If I'm trading on 1 or 2, that would be enough for me. Perhaps to win the challenge, you might need to trade more markets, maybe up to 3 markets, and that stuff is actually laid out in the trading rules on the Live Trading Challenge page. All right, pre-market routine, what are the things you need to do? What do you need to read before the market? What do you need to assess? Again, overnight momentum is not necessarily where the next day. We had that great example in yesterday's market. Pre-market, everything was looking good to the upside, and you got long right at the market, and what did it do? Bang, indices came down. All right, so you got to be ready for both directions on any given day on the futures or commodities for that matter. So pre-market routine is, who do you read? Where do you get your analysis from? Okay, I tend to shut off the TV, so I'm not watching TV, or at least it's on mute. I leave it there for entertainment, but I'm reading my macro newsletters that come into my box this morning, and I shared those with you on session number 1. After market routines, I told you about writing on your charts, taking a look at some of your assessments for the day. It's always good to go over at the end of the day. These are what successful traders. I'm not the only one out there. I won't be the first, and I'm not going to be the last, but at least I'm sharing that with you. And part of being in a community of traders is that I remind all the time and remind myself all the time of these steps, so it is ingrained every single day. And the day trading resources, what's going to keep you fed in this market. All right, quick recap of yesterday, but I want to go over the charts from yesterday because I know we took the time to set up the chart. I know we built the chart, and so I want to go over again, what is the criteria for setting up the chart? And so we talked about trend studies. What do trend studies look like? And we'll go over those again here, but it's one thing to trade off a minute chart. There's different increments. Some of you are comfortable with 15-minute chart. Again, it alleviates a lot of noise in the market. Some of you are happy with tick charts. I used to trade with tick charts. I started with a 512. I went down, kept coming down in numbers, and finally settled on a 144 tick chart. That seemed to I seemed to do okay on that. And that was when I was trading with tick charts. Eventually, I made the switch from tick as I had transferred from another platform to Sierra Charts, and Sierra Charts had the range charts, had the Renko charts, and the ability to combine those two. So working with Flex Renko is something that I came to appreciate in its value of trend. Guppy MMA, I'll show you again an example of that. Again, another trend study that's available. Woody CCI is another trend study, also in the lower indicators to identify the price is continuing in momentum. That's what I want to see. Every single setup is an opportunity that might run in that direction. All right, my gold standard setup, I went over that yesterday. Hike and Ashi bars combined with moving averages, that's my core strategy. That works for me. You all need to find what strategy works for you. You might go through a series of strategies until you connect with one. Once you've connected with one and you're starting to make some, at least more wins than losses, all right, at least more profit than what you're losing, and you will lose in the market. The idea is that you stick with the strategy, you tweak it as necessary, but you then start to work on the other stuff that's important. That's right. You start to work on your trade management, and you start to your trading psychology and your trade management. Those are the next two most important. Actually, those rank higher in my hierarchy of trading than the strategy itself. All right, we talked about how many strategies there are out there on Sierra Charts, and there are a lot. All right, executing the trade, don't question the setup, all right? You know your strategy, you see it. Just today, price action runs away, 1 bar, 2 bars. Well, how come you didn't enter on that first or second bar if that's what you have written down? You start questioning it. Enters on the 4th bar or 5th bar, hesitation, all right? The strategy part is the non-emotional part. If it all lines up and you've got it written out, that's when you take the trade. Now, sometimes I get questions like, have you automated your setup and you want to leave it to automation? Truth is, I don't. I like still evaluating the tempo, the market internals. I like to see where is the momentum of the market. Now, truth is, if you leave it up to automation, you're not looking at it. So turn on the automation, walk away, set your parameters that you only take a certain daily loss, and let it go. But I seem to want to still have more control. I don't want the plane to fly itself all the time. All right? Call it old school in a way. All right, additional technicals. We talked about Globex. We talked about some of those open gaps and VWAPs that you might want to keep on your charts. Those are just additional technicals to guide you every day in saying, you know what? Globex high, Globex low. Price action traded overnight in a certain range. You come into the next session, and all of a sudden you see price action moving. And right there, bang, it stalls. Globex high, pulls back, comes up. Globex high, won't push above. All right? And then finally, it pushes above the Globex high, pulls back, and pushes upside. Great. That's momentum. All right? That Globex tends to be a line in the sand. Not every day. Sometimes it just blows right through it. So you got to ask yourself, when are you going to take that entry that breaks right through the Globex? Are you going to just jump right in, or are you going to wait for another criteria? Again, it needs to be written in your trading plan. All right, should you know where the daily gap is? That's where did price action close the day before? A lot of times the market will retrace to the daily gap and then go up, or vice versa, go down. All right, price action, you should know where yesterday's high is, where yesterday's low is. Again, you're starting to get into other studies that include market profile, which is something, again, you can learn on down the road. But keeping it simple right now, these are some simple lines that you can use on your charts. All right, so that's session 2, again, you can recap, watch the video in more detail. And so right here, this is what we went over yesterday. Again, I want to revisit this again because we left off on that at the end yesterday. So coming back to it is really important to understand that the basic chart setup, and as you can see here, all right, this is what we built yesterday. Chart number 1 has 2 moving averages on it, all right, the T3, all right, T3 moving averages. One is set to a 5 period and one is set to a 10. Now, is that the Holy Grail? No, it's not, because you already know that the Holy Grail is simply patience and discipline. So the T3 moving average is a moving average that's available on Sierra charts. The Tim Tilson, you can read up more about it online, but it's a much smoother moving average that doesn't take the turns as quick. All right. And so I developed my strategy where if the T3 crosses over the T3 5 crosses over the T3 10, that's one indicator of trend. All right. That's chart number 1. Where is price in relation to those moving averages? Now, if you don't have T3, and I don't know why you wouldn't, because you're all trading with Sierra charts, you could use a 5 EMA or a 10 EMA chart, 10 EMA moving average on your charts. Now, why did I pick EMA? Because exponential moving average, I believe, works much better intraday than an SMA. A simple moving average I tend to use on my bigger time frames, such as dailies. All right, trend bars. I am a believer in trend bars. Again, you look at the bars, you say, well, where do you get in? What's the price? The bar tells me what I need to know. It's a solid body, it's a tail up, or it's a tail down. It's either green or it's red. All right, trending up, you see exactly what we had today. All right, these are trending up bars. Solid Heiken Ashi bars trending up here on the YM, all in trend. And you see what they're doing? They're sitting. T3.5 is above the T3.10. All right, solid Heiken Ashi bars to the upside. All right, and then you see these candles right here. There's 1, there's 2. Those are indecision candles. At that point in the market, when market action was moving, that was a moment of indecision. All right, and again, the Heiken Ashi bar relates to the previous bar. All right, we built this foundation yesterday. You can use just Heiken Ashi bars. It will say the same, but combined with the Renko bars. Again, if you know anything about Renko bars simply, for whatever setting you have it, if it's set to 10 ticks, every time 10 ticks moves on a Renko bar, it lays a brick. You could have wicks on them as well, but it lays a brick. But I need more information. What is that brick telling me? And so I found the combination Heiken Ashi bar and Renko. And these are actually called Flex Renko. And again, that's a whole nother video series to go into the details of that. But it's described in the Sierra charts help resource, one of these different type of Renko charts. But as you can see, just looking at it, if you can appreciate the fact that what it's telling you is a price action is in trend and can keep you in the trend, that's one way of looking at the market to stay in the trade. All right, so there we are. HA bars, Flex Renko. All right, so that's chart number 1. Chart number 2 is simply a 5 exponential moving average and a 34 exponential moving average that, and by the way, is on the same time frame. So if chart number 1 is on, let's say you're like, whatever, I'm not going to trade range. I like 10-minute charts. Chart number 1, chart number 2 should both be on 10 minutes. All right. Now, chart number 3, which is the bottom right-hand corner here, all right, bottom right-hand corner here, that is a 1-minute chart. And what I have on there is the 50 and the 144. The 50 and the 144 chart. All right, and so here we are. Here's the template. All right, here's the template build out for you. And in the lower right-hand corner is that 50, 144. Let's just go ahead and expand it there. All right, and what that is an indicator for me is what is the trend? What is the current moment? And now some of the questions I got is why 50? Why 144? Well, we know that a lot in the market, people tend to watch the 10, the 50, the 200, or the 20. I mean, you can almost have a moving average at each line. You can pick Fibonacci, 13, 21. Yeah, I have a 270. I mean, you could just eventually have a whole bunch of moving averages. But again, this was something that was shared with me. I told you that I've heard a lot of things along the way. And then when I found something that worked, I was like, yes, there's a strategy in this for me. And so the 50 and the 144, when the 50 is above 144, it starts to be an indicator of momentum trend. Okay, you look at this chart and you say, hey, I could just trade off this. I don't need anything else. If you find a strategy in this, be my guest. Go for it. It's just another indicator of trend. And again, I've used the slope to indicate the slope of the moving averages. 50 and 144. Again, 144 happens to be a Fibonacci number as well. And if you watch it enough, you'll see price action. Just take a look here. As I expand, what did price action have a difficult time doing? Actually had a difficult time breaking the 144 to the downside. And a lot of times, actually still find support at that 50. Again, a 1-minute chart for intraday trading. Longer time frames, I actually move it up to 5 minutes. But again, my range charts are also at a higher time frame. All right, so that is your basic chart setup. If you got something from that, from yesterday, and you set up your charts that's there, and you were looking at it today, I think you would have seen what trend tends to look like. All right, and so what I did in the basic chart setup, as you can see, is going from, let's go back here for a second, all right, taking that bottom row, you see nothing there, and then going to the next chart, all of a sudden I've given it an upgrade. What did I do? That's the beauty of Sierra charts. That's what you can do on Sierra charts that you can't do on a lot of studies. Row number 2 right here, this horizontal bar at the bottom, is actually this study right here in the upper right-hand corner. When this 5 EMA crosses the 34, it's represented in green. All right? The background in this chart is actually green. You can't see it. It's hidden there. But it shows up here on the chart. If anybody has seen my previous charts, you've noticed that I can actually color the background red and green depending on if the moving average is above or below. All right? And it's actually there. It's hidden right now. But down here below, it's represented by this horizontal bar. All right? And then the 5144 is represented by the third bar down. Okay? So that's my basic chart setup, going from what we built yesterday to what you see now. Do I need to go back a second? Do I actually need to look at these charts? I think when you're starting out, yes, that is good to watch, to understand. I still actually, on my monitor on my left, I still watch a 1-minute chart. I like to see actually the bar, what's it doing at the 50, even though I could see it on my main chart. Before I go forward, I actually missed something. You guys see this cloud? Some of you have been asking me, is that an Ichimoku cloud? Well, no, it's not. It's actually, this cloud is the same cloud that's represented over here on the 5144. I'm able to overlay this cloud, so this cloud is telling me the same thing that row number 3 is saying. So if you're looking for space on your charts, you don't want to have this horizontal bar down here on the 3rd row, you can simply overlay the cloud here. It's telling you the same thing. So what I can see here is I can see the HA bars sitting above the 2 moving averages. Moving averages crossed over down here, all right, and breaks out above the cloud. HA bars are in trend, and I have, that's right, I have all green. And where did I see that today? Well, I highlighted that on the NQ. This was today's session. We had it yesterday as well, all right, where everything was in the green. HA bars upside, NQ, everything in the green, highest probability setup. Next setup, moving averages cross over, starting to be an indicator of trend change. HA bars come down. Now what you'll notice here is these yellow dots are indicating that I only actually have 2 studies in trend right now. It wouldn't be what I would call my highest probability setup. I'd say it has a good opportunity, but you have to deal with, you can see the pullbacks here, which can come at any time in the market, but my highest probability setup actually occurred on the NQ right here when all the charts were in sync and actually ran a little bit further. Now, if you remember yesterday's chart that I showed, we had an amazing trend on the NQ to the downside, all the way down, and then some small pockets before the PM session, because trend charts don't always run all the way down. Sometimes they pause, and they don't go trending 100 ticks, 150 ticks. It's the opportunity to get in what might possibly be a runaway trend. All right, so that's the what. So right there, that's the upgrade. And then if you're looking for, especially if you're looking to conserve space on your monitors, and you want to just be looking at one chart, there it is right there. Now, there's jingles and bells that I've added. I've added audio alerts to stuff. I'm not going into that stuff today. But to start with the core chart right here, and what did we talk about? We talked about in the trading challenge, again, I don't know, somewhere around 10 or 12 indices that you can watch or markets. I'm not expecting that any of you will watch all those, especially if you're want to move into live trading. It can be a tough challenge to look at all that. But if you had to start to look at one chart, this would be it. And so I shared with you my screen share, which looks exactly like that, one chart. All right, one chart. Here's my indices downstairs. I have the 6E up here, the 6J, the yen, gold, and crude. And so I'm able, with time space, for you guys, if you have multiple monitors, you'll be able to set that up like that. All right, so there we are, one chart, all the indicators I need. And so there it is. Some of you were asking this yesterday, but I wanted to reiterate, this is the gold standard setup criteria that I have for myself. All right, it's very simple. Number one, I want to see where are the Heikin Ashi candles in relation to the 5144. That's the 5144 cloud. That's number one. Is it above it or is it below it? If it's below it, the trend is starting to move in that direction. Number two, I want to see that the Heikin Ashi bars are in trend. What does that look like? Well, it's either got a solid body and a tail down, depending on direction I'm going, or it's one of those indecision candles. I always wait until the candle closes to determine what it is. Not when it's forming, when it closes. All right? Number three, I want to see that the 534, that's row number 2, is in sync. All right? That's where the 5 crosses the 34. And then number 4 is this cloud here, which is in the red, represented by the blue down here. Same thing. It's indicating to me that we are completely in trend. And so patience and discipline in the market is waiting for those setups. And if you wait for those setups, everything else will come into play that we've talked about in the last 2 days. Trade management we're going to talk about today, but you're not going to question your setup. If the setup is there, you take it. All right. Oh, there it is. There's the picture from yesterday. I did actually post it, that not all setups simply run away. All right. Yes, incredible, nice move yesterday, only to rebound back upside. And again, there's strategies that pick up off the lows as well, and they're out there. But I don't need to go, and this is what a lot of new traders or struggling traders will do and say, I have to get every single move in the market. I got to get the down moves. I got to get the up moves. So, oh my gosh, I missed that up move. So I got to go and change my strategy. And so you could see here on the NQ yesterday, price action started to run a little bit, just like it did here. But you don't know. I don't know. Nobody knows in the market. All right, we're just talking about that today. All right, we don't know what's to the right of the chart. It's blank. Big ocean of traders. We're only trying to get a small part of it, a small piece of the pie. All right, so you're giving yourself the opportunity to see if it will run. And I've highlighted here the highest probability setups. And so this is where trade management comes into play that says, if it's going to run, what's going to give you that opportunity to let it run? And sometimes, depending on your entry, it will depend on if you were actually stopped out. Great example today. 2 traders, same setup. One took it at a different time. One got stopped out, and that's fine, but it was because of the delayed entry. Got stepped out on a candle wick. It happens, but that's trading, and that's trade management. Okay, let's keep moving. All right, so session 3 today is we're going to talk about this one contract, and please, in quotes, I quote, no loss. The reason it's no loss is because price action has moved forward and you already have a contract off. And if you remember, we'll go over here in a minute, but the setups for this, with Sierra charts for the live trading challenge, you have a maximum of 3 lots. So I'm going to go over 3 trade management styles for you today. All right, 1 contract off. If you have 1 contract, now if you're going to trade 3 contracts, you want to get 2 contracts off, so you have a no loss setup. If you're trading 1 contract off, 2 contracts, how do you get that first contract off? So you have a no loss setup. And then if you're trading 1 contract, nothing wrong with that, all right, is how can you move that stop to allow the probability of price action to run? And trust me, Not every setup's going to run the way you want it to run. And then quickly, we'll go over the other questions because these will vary based on each individual, but these are questions that all of you, I don't care how long you've been training, I know they're all in your head, but this is what you need to start answering. And the biggest one here is, when do I cut it? Where do I stop trading for the day? When do I cut my losses and say, I'm just not going to trade anymore? And that's one of the nice things about CR is you could put in a loss limit for the day and say, I'm going to walk away. All right, and say, hey, you don't have it today. It's not working for you. All right. And so right here, a great example of Jeff Quinto's trading plan, talking about, for instance, loss limit, 8 ticks per trade, 30 ticks per day. These are things that you should write down and should have already written down or typed up as well. And again, that information for Jeff Quinto is online at the CME, and the links already in the other videos as well. All right, I wanted to revisit here the 7 deadly sins of trading by Harvey Walsh, which is also available. But when he talks about, interesting enough, not understanding trade management, and of the other pages that I've shared over the last couple days, you notice that this one is the longest of all those. Interesting enough, huh? And what stood out for me was right here in this part of the paragraph, all right? And it was right here. They said, not only does classic money management ensure we have a decent shot at getting profitable, it gives us a what? A psychological advantage too. Knowing beforehand the maximum we can lose in any one day or any one trade removes a huge amount of pressure. Trading psychology 101. I don't know how many of you are casino bettors. They say that poker players make good traders. Well, what does that mean? If you walk into a casino, or at least the minimal amount of times I've gone in, I go in, let's just say you go in with $100, all right? You're in there with $100. I know, it's small, cheap amount, but you go in with $100. Sure, you would love to leave with whatever amount higher than $100. But the truth is you've actually gone in there willing to lose that $100, okay? And that's exactly what that paragraph says. We could enter a trade and assume that our money is already lost. All right? Now, is that simple trade management? Is that it right there? No, it's not. But if you go in knowing that actually the money you're already willing to lose the money that you've already funded your account with, that's the bottom line. Now, you don't have to agree with me. I didn't write this stuff. It's the stuff I see posted on Twitter all the time, and the stuff that I read about in books. All right? And I think it rings true. So if I'm ready to have a stop limit of $300 for the day, I'm willing to lose $350. We don't like it, but that's the truth. Okay? So take a look at that. 7 trading, one of those, I got to rename it. I don't think it's a sin, but basically those are the things that most traders do that probably leads to some type of failure in their trading plan. Okay, so moving on. This is a key page on livetradingchallenge.com. The rules: maximum daily loss limit, $750 per day. That means you are willing to lose $750. That's a lot, guys. I don't know how much you have in your accounts if you have a live account, but if, let's say you're starting out, new trader, you put $5,000 into a trading account. $750, you'll be wiped out in a week if you don't know what you're doing. So a good place, I'm just going to jump right into it. You're a live trader, you shouldn't lose more than $250 per day. All right? Now, do I say you should start trading live day one that you fund your account? Well, if you're coming from another trading platform or something, that's a different story. But if you're starting out new, no, you shouldn't. But what this does is it gives you an opportunity to start trading and have a maximum daily loss of $750. Now, if you hit $750 each day, you're not going to be participating in the challenge because the maximum total loss here is $2,500. And if you lose $2,500 in this challenge, you might want to ask yourself, what's going on? What didn't you do right? Hopefully every day you're going to revisit that and look at your setups and trades. So $750, how about you start trading and don't take more than a $250 or $300 loss for even the simulation. Now you're starting to train yourself so that you don't go down all the way, so that if you make that transition from simulated to live, you won't be saying, all right, 750, I could deal with that. All right. Eligible markets, we talked about that the other day. We talked about a maximum of 3 lots. I'm going to show you 3 trade management strategies here. Remember, the maximum position size is only 3 lots, and there's a combination of how you can do that. Don't forget, there's commission. So as you're trading, depending on how many trades you make, hopefully less than more based on a trend, is that every time you trade, there's a $5 per round, so in and out. All right? And obviously the other stuff that Jim's going to go over next week in his webinar as well. So you got to make a trade every day, but we're not focusing on that. We're focusing on what puts you into the trade. These 2 basic questions. All right, the 2 basic questions of trading that I ask each and everybody that I meet and mentor. As simple as the question may be, the complexity at which one answers this still bedazzles me to each day. And so I like to use this analogy. I don't know how many surfers are in the room, but I'll get right to the point. If you think about surfing, you watch the surf wave, I like to think of the market as a surf beach. All the traders, all the surfers are out there, right? They come prepared. They come with different surfboards, some better than others, just likewise. Some have better computers, some have different strategies. Each surfer does what? They wait. They wait for what? They wait, they have patience for the highest probability wave, right? The highest probability wave that they're going to be able to run it as long as possible. Now, let's say the most perfect wave came along, the most perfect trend, and everybody gets up on their board. Does everybody get up on their board at the same time? No. Just likewise, in a market trend, not everybody gets on the trend at the same time. People enter the trade at different points on a trend in the market. All right. And then as the wave is moving, what happens? Some people get off at different places. Sometimes the wave starts to what? Starts to pull back a little bit. And the more experienced traders will do what? Or the more experienced surfers will do what? They'll cut and say, whoa, hang on. I'm going to go back out and try again because I believe the next best surf is coming. Or the trend is going to continue, or that surf's going to continue. I know, strange analogy, but if you really think about it a little bit more in depth, that's how I see it. Okay, now I'm not a surfer, but I can appreciate the similarity as a trader. And so there's no rule that says we also need to trade each day, but you have 5 days in the simulation challenge, so you want to make the most of it. All right, there's going to be moments in the market that have a higher probability of momentum. Just as a surfer has different times of day when surfing is best. Okay? All right. So I'm going to leave the surfing analogy if you really want to talk about that further, but I hope you could see that there is some comparison to trading and surfing there. Now, so once you're in the trade, here we are, trade management. The big question is, how do I manage it? Now, if you recall, I mentioned that the strategy, in my humble opinion, all right, is only a small percent, but the larger picture is the trade management. So it's one thing to identify the trend and to enter it. And now the key is not to give your money back and don't give it back to the markets, bottom line. Okay, trade management templates. We're going to go over these here. We talked about the contract specs, right? There's a variety of different ways to play the market. Indices, you have a variety of obviously different contract sizes. So the NQ trades, every time it moves a tick, it equals $5. All right. Every time the ES moves, that's $12.50. And some of you are already drooling at they're going to trade the bonds, right? Now remember, the more lots you trade, the more you can make, but the more it can come back on you as well. And so right there on the trading rules page shows you with a total of 3 lots, what is your max open position that you can have. So if you're going to trade 3 lots, you could trade 3 of the ES, all right? You could trade 2 of the ES, and you could have 1 contract on another at the same time, or you can trade 1 contract on 3 different contracts. And I don't think it's such a bad idea, especially if you're wanting to try out different markets, is find yourself a lower priced market, find yourself a middle price market, and jump on something that's a little bit more. Now, I'm not saying you have to jump up to the ZB, but at least, you know, try the NQ, maybe the crude, and maybe the ES, or one of the other $12.50 contracts. Now, some of these actually move nicely during the Globex session. For instance, the euro. That's one market you might want to watch, or the 6J, the yen, which happens to move quite well in the Globex. All right, so now you also, just a quick reminder in case you forgot, can you do well on the NQ at $5 in contract? Absolutely. Absolutely. 100+ tick runs can be there, and sometimes can actually run further than the ES or any of those listed under the 1250 contract. So management templates, all right, which we'll get into here in a moment, but I want to get to the first thing before we get to is that you have to have a stop. Oh, I'm sorry. It's actually there in the rules if you read it. Let's go back here for a second. There it is. You have to have a stop. Right there at the end. All positions must have working stop orders. All right? And you have to trade with one. Trading with one is stop is impaired. I know there's some people that say, I trade with a mental stop. No, you have to have a physical stop, at least for the challenge. And I believe it's good trade management to have one all the time. Now, this is where many traders, like I said, will confide in me that they don't want to risk sometimes more than a 5-tick stop. And I simply reply, the high winning percentage of a trend play is having your stop in play, but you have to give it some room to wiggle at first. All right? And so what I like to do with my stops, all right, what I like to do with my stops, and I'll show you here on the chart, all right, chart number 1, because that's our trading chart. As soon as my price action is in trend here, you can see it on the charts. Okay, this is a confirmed setup. You got your T3 moving averages moving upside. You have a couple places you can move your stop, and this was a question that was brought up yesterday. The first place you can put your stop is right under the entry bar. Remember, HA bars are a little bit different. They're a trend bar, so as soon as you place your trade, it's actually going to be at the top of the bar. All right, that's where price action is. All right, I know that can throw off some people, but like I say, you got to try it first on simulation to see if you actually like it. As soon as price action starts to, as soon as you place your trade, the first place for option number, well, let's start with where I place my stop, because this comes from long-term trading of using Fibonacci setups, is I use the swing position. All right, swing position means the lowest low or the highest high, depending on trend direction. So price action came down here and moved up. My stop is at the low right there. Now, even in simulation versus live trading, let's say your entry, okay, you confirmed your bar. There it is, right? The bar is up. It's looking good. And once you place your entry, it's going to be somewhere on this bar here. So where's your stop? All right, I'm sorry. Your entry would be, let's say, on this bar. This is the way I have it tagged here. All right, so option number 1 is having my stop all the way down here. Does that mean that if price turns on me and comes back down, I'm going to wait for it to stop me out? No, it doesn't. I'm not going to wait for it to stop me out down here. And so, all right, that distance from here to here, for some of you are just like, no, I'm not going to play that way. I can't do that. And so the alternative is simply placing the stop at the bottom of the first bar. All right? That's an option. All right? So stops, you have to have them. You have to have them at a reasonable distance. Some traders simply, they don't have them at all, but you have to have one. You have to trade with one. And so right here on this chart, I put my exit strategy. I simply laid it out clearly. This is, once trend runs, the next question I ask you is, what gets you in a trade? I've identified that. The exit strategy can be left up to 2 things. Once you're in trend, you can use pullbacks to manage stops. You can use individual candles with wicks to move your stop down. All right, there's a variety of different ways. For me, it's first about identifying the highest probability trend and letting my trade management take my trade where it wants to go. All right, from there, everybody's going to have a different comfort level, and nobody should ever tell you when to get out of a trade. It all depends on you. I don't even do that. Now, I might share to say, yeah, I'm in the trade, this is what I'm doing, but I'm not telling anybody where they should exit. Some people run longer, some people run shorter. That's okay. We all try to get just a piece of the pie. The question is, how do you stay in long enough Well, we got a different variety of ways. So let's go straight to the chart, which I have different options to trade. Whoops, hang on a second. All right, so let's go to the charts. And let's go to the trading template. We'll actually jump to the one chart. And so first thing you want to do is I have my live charts, but I'm on simulation here because we're going to do a replay here, and we're going to use the NQ. And so the first thing I can do is I attach the trade window to the chart. All right. I like trading from the chart versus the DOM. That is an option that I rather trade. And so there are 3 templates that I have available for trading when it comes to trade management. Now, the first thing we got to do is we're going to play a little replay here. And so to do that, we're going to move the market back. Let's just move it. Let's just move it. Let's actually center this a little bit. Let's move it here. Here again, you can see the feature. Let's play the highest probability setup here. Let's just jump on anything here. It doesn't matter. Let's just jump right there. Okay. All right. And so what we're going to do is we're going to do one contract. Now, I don't know how this trade, actually, I just picked there because I got everything in the green. I have no idea if there's a tail there or not, but the idea is I got to place the trade. All right. So first thing I'm going to do is I'm going to hit chart replay chart. And so let's move that over so you get to see that feature again. All right, and we're going to use all the charts in the chart book. All right, and we're going to hit play. And we didn't do any simulated trades here. So, okay, so right now I'm going to go ahead and simply pause the simulation. All right, so the first trade management is one contract. All right, by the way, you could change the settings here of how you see your profit or your loss. You can simply go to the chart settings, and you go to chart advanced settings number 2, and right here in the right hand corner, that's where you could change. You want to look at points, you want to look at dollars. I like to look at it as far as ticks are concerned. Okay, so I have a setup, right? Solid body tail up, the moving averages are above each other, everything's in the green. And my target is set up, I'm on one contract. My target one is 50 ticks away, and my stop is, I don't know why it's, that's incorrect. It should not be at 75 ticks. I do not know why that's set at 75. It should be 20 ticks. All right, I got to change that. Okay, anyway, all right, so there's one contract set up. I apologize for that. It should have been like that. But what's going to happen is that on step 1 down here, move to break even to stop, break even level offset says that as soon as price action runs 10 ticks, my stop is going to be brought to break even plus 1. And when I go to step 2, as soon as price action gets to 20 ticks, my stop is going to be moved to break even plus 10. Now, I have no guarantee that I'm not going to be taken out by a tail, but let's just go ahead and hit the buy here, and let's let the simulation play itself out. Now, as we can see, we know it's going to be in trend, but hey, we have a high probability setup here. Now, I want to move the simulation forward a little bit to show you how the price met. Okay, so obviously that moved pretty quick. Let's just do it one more time because I want you to see the bar actually. And the truth is, you're gonna have to play with these to see if you actually like the numbers and if it actually works for you. Okay, so my stop is 20 ticks. Now, remember I said you can move your stop. You can move your stop to anywhere. That's up to you. But one thing is you never do is you never move your stop backwards other than the first point. All right. If I move my stop to the swing size right there, I do not move it back anymore from there. All right. So let's move forward here and see what happens to price action. The first thing is as soon as it moves 10 ticks, there it went to break even plus 1. I'm on one contract and I'm giving it the probability that it's going to run further. And as soon as it runs, and you can see What happened? Tail takes me out. Now, you could tweak these numbers. Unfortunately, sometimes that's going to happen. Tail's going to take you out, and we can get back in. We can just keep getting. Now, that's up to you if you want to keep getting back in and forth. I don't recommend it unless you got some indicator that shows you continued trend. So I'd wait for another solid Heikin-Ashi bar buy up, but I just want you to see how the trade management moves. So price action continues. Oh, there it is, another long tail. Now price action ran 20 ticks, and bang, my stop moved to break even plus 10. From there, you simply trail up your stop. All right? Once price, and this is one contract, so as soon as price runs a certain distance, I have it set so that price action, again, my target is way, 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 but it's in my stop that I've managed. It's offset and ticks triggered. It's going to move to break even plus 1. Now, if you don't want break even plus 1, you decide. You want to break even plus 0? Do you want to break even plus 5? Step 2 is the key. Step 2 is where does it go after it's run a certain amount of distance. It's another feature you can add to your trade management. Okay, so let's stop that, and let's now do 2 contracts. Well, let's flatten that trade out. We're going to be done with that. All right, let's do this again, but this time let's just start here. Give it a little bit of probability trend. All right, not everything's in trend. All right, let's try there. All right, and this time what we're going to do is 2 contracts. We're going to trade with 2 contracts. Now, the way it's set up on 2 contracts is I have target 1 and target 2. Target 1 is going to come off at 10. Now, does you have to do 10 ticks? No, you can do whatever you want. You can do 8 ticks. You can do 15 ticks. My second target is, because I'm only trading 2, is going to be far, far away. Both of my stops are 20 ticks. The only thing I've changed is in stop number 2. What's going to happen? Stop 1, first of all, when target 1 comes off at 10, stop 1 is gone. So all I'm left with is target 2 and stop 2. Target 2, 75 ticks. I'm not worried about that. It's stop 2 that needs to be managed. So look what I did. OCO group triggered means that as soon as the first contract comes off, my stop's going to be moved to -8. Step 2 is that when it moves to 20 ticks, it's going to move to, and I think I was working on this, I was tweaking this a little bit yesterday, but the idea is that once, hang on a second, I meant to put a 10 there. Okay. I actually already have this set up. Hang on a second here. It's trade management number 4. It will be 2 contracts, but it's the same idea here. So once it runs, I guess I did goof here. All right, I need to fix this. I apologize, guys, but basically what's going to happen is I'm going to move this -8. That is correct. And as soon as it runs 20 ticks, I'm going to move it to break even plus 10. Actually, you could use it either way. It doesn't matter. Here's the idea, guys, that once the trade, right, once the trade is placed, everything here is automated, all right? So I have a 2 contract trade. The first thing is my stop is automatically placed at 20 ticks. What I can do is I can move it down to the swing position here. Everything is automated from this point forward. So that as soon as one contract came off right there, right, I have 10 ticks in the bank. If price action comes back on me right now, I will leave the trade with only 2 ticks. And what I'm doing is I'm giving a little bit of room here for price action to actually pull back, take me out, but I'll still walk away with 2 ticks from the trade. Now, if price action, we know actually is going to pull back a little bit here, but if price action moves 20 ticks upside, you see what happened? Price action ran to my break even, but didn't take me out. I still have some in the bank. Oh, there I go. Perfect example. I wanted you to see that. What did I leave with? I still went, that's right. All of a sudden the market went against me, but I still left with 2 ticks. Nice setup. Now, do I want to get back in? Sure, I want to get back in. And so I wait for price action to lift again. All right, there's a solid Heikin-Ashi bar. I'm waiting for the confirmation. All right, simulation sometimes takes a little more. You got to forward the buttons in your favor. Let's move forward. And, ooh, deep pullback, but we still walked away. Now, some of you are asking me, at what point do you bail? I bail when the candles start going against me. Okay, there's a re-entry. Everything's in trend. All right, let's see how this one works out. All right, I don't have anything off yet. Bang. In quotes, no loss setup. I'm going to lose the first contract, but I've already banked that amount. Price action runs. Look where the stop moved. It moved to break even plus 10. This trend if this trend goes against me, how much am I going to lose? Am I going to leave with? I'm still going to leave with at least 10 ticks in the bucket. And from this point, I just simply move my stop up to the swing tails. All right. All right. Nice trade there. All right. Great example. I'm glad that showed up. Now, trade management number 3. All right. Trade management number 3 is a little bit more. And again, something I don't like to play with. Whoops. Hang on. I didn't want to do that. Something I don't usually play with. I usually don't like trade more than 2 contracts. Let's actually flatten that trade. We're done with that. All right, we're going to move this back here. And let's just go back here. And with 3 contracts, all right, what I'm going to do is I'm going to take one off at 5, one off at 10, and it's all about stop number 1, 2. Didn't do anything to stop 1, 2, 3. It's all about stop number 3, how it's going to be managed. All right, and so I'm going to hit play, replay, and so stop number 3, let's just go ahead and hit the buy button, see how this plays out. All right, it's already in trend. I'm going to take one off very soon. All right, now I have 3 stops here, so I'm going to move them down to my swing stop. Now, does that mean I'm going to let price action run all the way down? No, I'm not. I'm not going to let it come all the way down. But I am going to keep it right there. All right, what's going to happen here? All right, one contract comes off, right? Stop is still downside. Second contract came off. Now what? My stop is still below my entry. Why? I'm giving it some room, but I've already booked 15 ticks. So if price action comes all the way down to my stop, I'm going to still bail with 3 ticks. Now you could tweak this to your liking. This is something that takes a little bit of time to play with, but now the price action moved forward because what? I actually have it set to, as soon as price action runs to 20, as soon as I get 20 ticks upside, my stop moves to break even plus 3. So if it actually comes back on me, I'll leave with 3 ticks, which covers your commission. And that's what I call the no loss setup. And so as the simulation runs forward, you can see now I'm in a winning trade and price action 15 plus 43, you flatten the trade and you walk away with 57 ticks. Now, it's not easy. Some of those tails are going to take you out sometimes, but that's what I've developed. I've developed what I feel a trade management that works for me, that automates itself at first and then allows me to manage it along the way. Now, are there other ways that you can follow a trend in place? Sure. You can simply play the in and out, all right? If we're range bound, you can trail, you can use Hike and Ashi. There's a variety of different trending studies out there, all right? Those are some examples. Let me go back to the chart here for a moment. I've actually highlighted them on the chart. So one of them is actually called the super trend stop, another way of allowing you to stay in the trend. You can see these lines here. Those are the ability to move your stop up to those levels. If you're going to use that kind of trade, if you're going to use that kind of strategy, what I would recommend is that you keep it maybe 1 or 2 levels back. All right, so that's the super trend study. Another study on here that I had labeled was the Kiwi trailing stop. Okay, shows up like a moving average. Let's unhide that. That's what that looks like. It's just another type of trailing stop. Kiwi trailing stop. You have the Guppy MMA. All right, that's what the Guppy MMA is. Talk about learning to stay in the trend, multiple moving averages. All right, as long as price action is all above the multiple moving averages, you might want to consider that way of staying in a trend. There's actually a Kiwi super trend which combines the Kiwi, I actually had this on here twice, the Kiwi super trend actually combines the super trend and the Kiwi, just two different forms of trailing stops. So those are all options. If you want to check those out, those are studies that are available on the platforms as well. All right. So we've covered a lot of material here today. I'm about to wrap it up. So what are the other type of questions that you want to answer? Number one, how many ticks am I trying to make each day? That kind of is a personal question, but hey, it might be $100. It might be, and I'm talking about live trading. Some people are happy with taking $100 or in ticks, depending on what market they're trading. 2 points on the ES. I'm done for the day. All right. Maybe it's 100 ticks on the NQ. All right. That's something you should write down. Does that mean you bail after that? Well, that comes into trade management. Depends on how much you're willing to still play in the market, depending on how much is in your pocket. All right. Being in the simulation, it's, you know, as much as you want. How many trades do I plan to make each day? That might be a question too that you have in your trading plan. Hey, we talked about over trading yesterday. That's something that you might want to think about. How many trades are you playing each day? Hey, you got your AM session profits. Maybe you got some in the Globex, and are you give it back in the afternoon? Maybe that's something you don't want to do. So how many trades do you plan to make each day? If you have a number and you write on your trading plan, then you stick to that number. All right. How long do you plan to hold winners and losers? All right. We talked about that. That's pretty much your trade management. You got to spell that out. All right. How long do you plan to hold? So price action's running in trend. Where's your exit strategy? That's what I'm asking. All right. Losers, I know exactly at what point I'm going to get out. Price action on the Heikin-Ashi bar starts to move. I get an indecision candle. The next bar is down. I'm most likely going to bail out. All right, I can bail out with 15, 20 ticks, maybe. Now, if you're on 2 contracts, all of a sudden that becomes a 30-tick loss. Ooh, 30 ticks on the ES, that could be a lot. All right. My loss limit in ticks per trade in total dollars, that's something you might want to ask. We talked about that. $250 loss would be a reasonable loss. Okay, you have $750. Do you want to go to $750 a day? I wouldn't recommend it, but it's there for you. All right, what will you do after X number of losses? You could set it up, all right? You could set it up for yourself that says, or you could actually, I believe, set this up with Infinity. If we can answer that in a little bit, but hey, you got 2 losses. Hey, something's off today. You're not 2 consecutive losses. Let me put it like that. 2 consecutive losses, you might want to call it a day, but write it down in your trading plan and stick to it. All right, strategy for increasing and decreasing my trading size. I love this question because here's an example from my old trading plan. All right, so here was some of the trading plan examples that I gave prior to the other one. All right, 25 picks per day or most $500. All right, that's what I was starting out. My strategy for increasing my trading size. So if I made a certain amount, what was I willing to do on my next number of trades? Those are things you should be able to write in writing. All right. How long do I hold winners and losers? All right. This was back in the day when I was holding on a little bit longer with Fibonacci. All right. This is just an example. Again, it's not a recommendation, but this was where price action, again, another trend strategy using Fibonacci projections. All right. Depending on how many contracts I was trading, once a certain level is hit, where do I move my stop? Where do I move my stop? It's just another trade management question. Okay. All right. So recap. We talked about several different trade management styles. All right. The templates that you could set up. Very nice strategy. All right. And these quick, just identifiable things that you should have in your trade management. Again, the focus was really on the trade management today, but these are questions that will supplement your trade management. All right. You're on a roll. You're on a roll. So what do? What if you're on a roll and all of a sudden you take 1 loss? You hit a second loss, but you're still in the green. Do you try to make that back? Or do you say, hey, I'm done. I better just leave with what I have? Some people, hey, first trade in the morning, it's a beautiful trend yesterday, 150 tick trend. And you say, I'm not even going to risk that for the rest of the day. Some people will trade like that. Some people don't believe that. That's up to each individual person. All right, so I can't help but reiterate, please get yourself into a good read on the 7 deadly things that traders do that, you know, affect their trading by Harvey Walsh, there's a free copy there on the Google Drive online. You just go ahead and search. But that pretty much, if you guys want more information, feel free to email me, david@tradingfibs.com. You can also follow me on my Twitter @tradingfibs as well. I also, at my website, let me go ahead and show you that for a second here. All right, so here on my website, you come to the welcome page at tradingfibs.com. I have some great stuff here that keep you, whether you're in the challenge or beyond. If you're interested, every day I post a blog here on the market. I also do a daily trend. I look at the week ahead, which is posted with Mr. Top Step, and also See It Market. You can read more about some experiences in the trading room, e-manual membership as well. And with that, I'm not going to go into that. You guys can check out what that's all about. But it's the trading rules here page that I would like to talk about here for a moment. All right. And this trading rule page with no obligation is an offer to you guys. Because you've stayed here, hopefully you've been here for most of the simulation, is I am going to give you a link to the share drive where I have not only posted the 7 sins by Harvey Walsh, but a lot of the charts that we've seen here, including there will be after today those 3 presentations and including the Sierra chart template. Now, if you go to my trading, hang on a second, if you go to my trading rules page, all right, and you scroll down, all right, you have a lot of good information there, but if you scroll down and right there, you click on this link, that will bring you to the basic template. However, if you email me, all right, there's my web address, I will give you the link to the share drive that has all this stuff, no obligations here, and you may visit my trading room not only tomorrow, but next Thursday and Friday if you desire, and for 1 week following the simulation, and see what it is basically that we do each day. All right, I'm not going to throw you inbox offers and stuff like that. 1 email, give you all the information you want. You guys decide what you want to do. That I just want to be a support to you along the way, but I want you to give a try in this simulation. If you're already live trading, you need some more information, start with the share drive. The template's there. Again, the template's going to be available through Infinity Futures down the road, but this is an initial offer for you guys. And again, for anybody who's viewing this after the simulation, just go ahead and email david@tradingfibs.com. I'd love to help you out with your Sierra Charts platform and give you an opportunity to work on. Again, it's one strategy is great, 3-part series, awesome, but it takes a long time to develop that holy grail of trading, which is patience and discipline. And so again, I want to thank everybody in Infinity Futures. I know there was a lot of information. Learning doesn't stop. It continues, but hopefully these video series gave you some food for thought. Okay, so now I have a bunch of questions here, and so I will see if I can get through these as much as possible. And if I don't, feel free to email me. Okay, what is the range on ticks for your bars, please? So, Ann, I use a, let's pull up my charts here. So I use a what's called a 10-7-0, all right, 10-7-0. That's a flex Renko, all right, flex Renko. And so if you email me and you get this chart setting, it will already be set. And that's one of the nice things you could do is you could go see what my settings were and you could play with them. But 10-7-0. Now, if you're trading the ES, I tend to keep that on a lower time frame, which is a 5-4-0, 5-4-0. Now, being part, if you do join me in our trading room, where we're using these charts, you can ask those questions along the way too, and start to tweak your charts as needed. Okay, let's see. And by the way, charts 1 and 2 are the same. They always need to be the same. Can I show you the multi-charts again? I'm not sure. Oh, Pip left. I don't know what that was. Okay, Joel, the link for The only thing I can tell you is type in Harvey Walsh. But again, you just saw that I was showing you the basic, if you email me, I'll go ahead and give you the link to that share drive. So now you'll have those 7 topics. So if that works for you, at least you could start there. Okay, Joe, the question was, how do you enter a trade? So I hope I answered that by simply hitting the hitting the button there. But it was, again, just by hitting the buy market. And again, if a trade is not going in my direction, I will always hit the flatten button. So here's a great example, guys. Let's just say, for example, this arrow right here, all right, that right there was the setup. And all of a sudden, what happened? 3 indecision bars, all of a sudden price action was coming down. And my stop was, let's say, down here. Am I going to stay in it? Well, if I got 100 ticks already in the bucket for the day, I might consider it. But, all right, and I'm also watching the other indices usually. Now, if I'm trading crude, I have no other thing to watch except crude. If price action does turn on me and it closes here, I most likely will bail. That's it. I'm out. I don't know what's going to happen next. I don't know that it's going to turn back upside. So I have to cut my loss quick. But you got to write that down in your trading plan and decide what is that going to look like. Hey, right here, those 2 indecision bars, I'm okay. Right now, they don't tell me that the trend has changed. You show your trading dome in real time, and you mentioned that you are in a trade even before your entries. Someone else, they say in trade. In other words, there is no after saying you are in, according either the dome is displayed or you speak of them. Okay, so that's a whole nother topic. That's shadow trading. I don't believe in shadow trading. I don't think anybody in this presentation or even hearing it should ever follow exactly somebody's trade. There's always going to be different timing in a trade. And that gets into a whole nother bowl of buckets when it comes to shadow trading. A lot of people in my experience have gotten very upset, especially when you take a loss by just following somebody else. If a meteorite comes and hits me today and somebody's just been shadow trading, they haven't learned anything. They have to learn the principle. But yes, I do share exactly when I'm in a trade. I give the price. I give the stop. I show the chart afterwards that shows the live trade. So that would be your answer, hopefully, to your question. What gets me in a trade is the trend, Joe. Gets me in the trade is the trend in momentum. And hopefully I answered that. There was a chart here in the presentation that I showed that was way back, but it's my basic chart which shows price action underneath the Heikin-Ashi bars. Well, let's just quickly go to the chart. It's right here. Price action is above my, well, here, let's use this. Price action is above the cloud. It's above the moving average, and I have the 2 bars in sync down below. So if I'm in momentum upside, they have to be all in the green. And so if you look actually at today's session on the ES, right, this would be the move. The moving average is crossed over, solid Heikin-Ashi bar upside, everything's a go. It's only a matter of where you get in the trade and how your trade management. Unfortunately, it depends on where that first or second contract comes off, because you could see the tail here can easily take you out. And that all depends on how your trade management is set up. But hopefully I piqued your interest to show you can actually set up an automated trading strategy right off the charts with Sierra charts. Okay, I answered and 540 flex Renko. 540 flex Renko. To recap, when you get into a trade, when the T35 crosses T3, that, yes, I would like to see the T35 crossed above the T3 trend or vice versa, but that's not what puts me. That's just another indicator that trend is upside. James, thank you. Thank you, Daniel. Thank you, Barbara. Thank you, Ann. Cal, if you're going to trade the ES after hours, I would wait usually till the end of the Asian session. Now, if some news piece comes out, it's always an opportunity to get in. But I would drop the time frame down. For instance, if you're trading usually a 5-minute chart, I would trade down to a 1-minute chart. So on the ES, just be a little bit more careful of your time frame. I would drop it down maybe to a 320. 320 flex Renko. Joel, thank you. Email me if you have any. Yeah. Thank you. Do you have trade? Do you have to trade live with Sierra, or can you use maybe? I believe. I mean, you can use. No, you have to participate by using the Sierra charts to participate in the challenge. Thank you, Cal. Thank you, Mitch. What would it take for you to change the flex record? Oh, great question. So on my charts, I actually have them. I have it set up here, up at the toolbar that can switch it easily. I just go. I click 10.7, and I click it down to 6.3. So all you have to do is go into the chart settings, all right, and change it right here, and just change these numbers right there. Okay. All right. Thank you. Thank you. Thank you, guys. All right, Jim. I think we've covered. Are you there?
I am here.
Woo.
Very excellent. It recaps a great 3-day session. Fantastic.
I only wish I was following you, but go ahead and put your plug because people can benefit from that as well.
Well, right. I just really want to remind people, if you haven't already and you want to try the live trading challenge, it's free. Go to the livetradingchallenge.com to register, and you'll get a confirmation for a registration. Then on the 9th, I believe it's the 9th, we're going to
right here. I got it up for you.
Yeah. Okay. So then we'll email out credentials, username and password, and all that stuff. And we'll have a rules webinar the following Monday. So it's June 4th to the 20th, as you can see, 5 days, and it's a lot of fun. There's every other month we're going to do it. So if June doesn't work for you, we'll have one in August, and we'll have one in October, and then the championships will be again in December. So feel free to go and just sign up and represent your country and city proudly. Hopefully you'll make it to the leaderboard every day. So that's it. I do want to remind everybody, trading futures, options on futures involves substantial risk of loss, not suitable for all investors, and past performance not indicative of future results. So be careful out there. Have any questions, give David a call or give me a shout. And thanks again for you being here with us today. Take care.
Thanks, guys.